One of the most common questions all traders have is, where do I place my stop? Where do I place the point on a trade where I know I'm wrong and I can get out safely? Our guest is here to talk about that, Mike Toma. Mike, thanks for being here.
Thanks, Tim.
Well, what kind of factors or what things should I consider to know where to place my stop on any given trade?
Well, actually, you just mentioned it previously in your intro when you mentioned where you're wrong. What I see is a lot of traders, especially some of the newer traders, they'll put a stop at a fixed place, such as maybe 2 points on the ES futures or even 6 ticks. It may be great. It may be the proper way to do it with the proper risk management. However, does it tell you where you're wrong? One of the things to do, I would say the first step to do is find out where you think you're wrong in the sense of, if you have a support level or a reason for your entry, at what price do you know this is not working out? And that may be a lot more than 6 ticks or 2 points. What I would really suggest as well is to factor risk reward into the whole equation. First step being, find out what would my target be? Where's the place where you think my resistance level will be? Say, for example, 6 points on the ES futures. Okay, well, if I'm going to maintain a proper risk reward of, say, 2 to 1, which should be in your trading plan as a rule, whether it's 2 to 1, 4 to 1, whatever it is, you don't want to violate and be compliant with your trading plan. If that's a 6-point target, then I know if I'm 2 to 1 risk reward, I have to keep my stop maximum 3 points. So if my area where I think I'm wrong is beyond that, I may have to forget that trade for now.
And that's what it's really about, is deciding whether or not you're even going to take the trade if you can't afford to lose that much money.
Yeah, and all more important reason to have rules in your trading plan. This is decisions that are made not during the trade, but before the trade. In fact, once you really push the button, it's pretty much let the trade work. Either it's going to hit its target or hit its stop. Of course, if you have multiple targets and you have a scaling out procedure, well, then you would manage it accordingly. But really, those are decisions that are made before you even enter the trade. Actually, when the trade's on, it's one of the easiest parts of the day.
Well, a lot of traders would say that the market knows where my stop is, and market makers or specialists will come down, hit my stop, and then reverse it right back again. How do we avoid that as a trader?
It happens to the best of us. That happened to me this morning, actually. So I feel the pain. But really, one of the things you have to consider is all the factors. The most important thing is, again, know where you're wrong, proper risk management. But at the same time, you have to know some other things. There's certain market nuances that are very specific to certain markets. And again, going back to the ES futures market, there are a lot of algorithmic trading patterns and volatility that has to be considered in that. If you have a 2-point stop in a market that's pretty slow and dull, maybe around the holiday season, and now you have markets with 30-point ranges, those 2-point stops aren't going to cut it anymore. In fact, I'm all in favor of people using stops. It's a requirement. But just to put basic simple stops there without thinking about your risk or where you're wrong, you'll get chopped up as easily. It will take longer for your account to dwindle.
All right, and then finally, mental stops versus actually putting in the stop into my system that is in the program that's going to happen. What are your thoughts about both of those?
There are some specialist traders, I see it really works well for them. But really, one of the things the reason you really want to put the hard stops in is because of systemic risk. It's not just about trading risk. What if your platform goes down? What if there's a lightning bolt hits your house and you're all done? I don't care what mental stop you have. It's not going to avoid it. My coach, I had a mentor when I first started, and he used something that was somewhat cruel, but he said, use stops or get out of this business. And that's really somewhat strict, but it really makes sense. Of course, as a risk manager, I instill everyone use stops, but the mental stop route, only for the select few. And to be honest with you, if it was my client, I would say no, always use it, particularly for that systemic reason.
Mike, thanks for your time.
Thanks, Tim.